Good morning, everyone. You're very welcome to the Ingenium When the Dust Settles and the Clouds Part webinar. We're in Zoom webinar format. At the bottom of the screen, there is a Q&A button that you can use to put your questions to the panel. Please feel free to use this as you have a question. Without further ado, I would like to hand you over to the Chief Executive Officer at Ingenium, Dr. James Ring.
Thank you very much, Shane, and hello everybody. And I know there's people tuning in from all over the world here today, so I'll start with saying good morning, good afternoon, or good evening from wherever you are. You're all very welcome to this webinar event. My name is James Ring, and I'm the CEO here in Ingenium. And the reason we're having this event, of course, is because we're launching a new brand and a new website. And I would hope that at some stage during the event or after in the tail of the event, that you might visit our website and have a look at what we do, because we're an unusual company in that we're made up of 5 different business units. One part is around human performance in safety and risk mitigation. We have a strategy and change department. We have a learning and development department, a digital solutions department, and also a corporate finance department. So if you do get a chance today, I would be delighted if you would take some time to have a look at our website, what we do, and give us any feedback you have on the website or the brand. But let's get to today. So I don't think my speakers need much of an introduction, but we'll do it anyway. So firstly, we're going to go to Dublin, to an economist who I think is known the world over. In fact, am I right in saying, David, you're actually in the top 10 most influential economists in the world now, which is a really, really positive and strong place to be.
So they tell me, James, so they tell me.
Absolutely. So we, of course, David McWilliams is an adjunct professor of economics at the Dublin School of Business in Trinity College. And of course, I think has a huge following on his highly popular podcast. I think what we love about David is that he makes economics easy to understand. So for laymen like myself, I've learned a hell of a lot in a year and a half of listening to David. So David, you're very welcome today.
Great to be here, James. Really fascinating. Thank you so much for the invitation.
No, not at all. The next speaker, again, needs no introduction, but we will anyway. Mary Harney, I think, made a career out of not just breaking glass ceilings, but shattering them. So Mary, of course, is most well known as being the former Deputy Prime Minister of Ireland, as we call it in Ireland, the Taoiseach. But for those of you who are not from Ireland, that's too hard of a word maybe to pronounce. But she's also, since retiring from politics, she is now the director of a number of private companies in areas such as pharmaceutical, healthcare, technology, and financial services. But it is notable that she was the longest serving female government minister in the history of the state. And nowadays, we're also very lucky to have Mary in the role of Chancellor here in our university in Limerick. So Mary, you're very welcome this morning.
Thank you, James. I'm actually a recovering politician, is how I describe myself.
Absolutely. And finally, our last speaker is Dr. Hugh O'Donnell. And Hugh would be well known across multiple sectors of business and industry, because he's had a very successful 30-year career so far, and he's still going in multiple sectors from financial services, but I think he's probably well known for his time in the energy sector. Hugh these days is an investor with Mack Investments, and this company invests in high potential startups, and I suppose bringing structured products and emerging market funds. His background, of course, was as the CEO of the Kent's Group, where he oversaw an organization with revenues in excess of $2 billion a year. He's a recognized as leader in his field and was awarded actually the CEO of the Year by the London Stock Exchange back in the noughties. So Hugh, you're very welcome here this morning.
Thank you, James. I'm delighted to be here in the Ingenium office.
Excellent. So we get on with this. We get on with the show, I suppose. Now, as Shane mentioned in the introduction, there is a question and answer function. So if you do have a question for the panelists, please feel free to send them in. Obviously, I mean, at the moment, there is something like 500 and plus people registered for this event. So I'm not obviously going to be able to get through it all if you do all start asking questions, but I'll do my best as we can. So before we start, we're going to do a poll. So you're going to see a poll come up live on your screen now, and I'm going to ask you to vote in it. And what we're asking you for is how confident you are that your business can survive COVID. So as we know, we're going through a lot of change at the moment. We're going through a lot of upset. A lot of businesses have been forced to close. And many companies and people are being kept alive, I suppose, by this PUP and those type of payments from the government. But will they be enough to get us through the next few months? And also, how do we survive when they're taken away? So talk at the moment, as we know, in the press last night and in the news last night, we were talking about restrictions being held until November, that potentially the PUP might continue until November. And if it doesn't, what does that mean for people as the government start weaning us off it? Are we solvent? Are we not solvent? So let's see what the results are in terms of how confident are you that your business can survive over the next few years. So Shane, have we got the results? Okay. Well, that's a really, really, really strong place to start this debate. So what we're seeing there is the vast majority of us are either confident or very confident that we'll keep going. There is 2% who said that they're not very confident, and let's see what the panelists think about that. But let's get going with today. So we're going to start with David McWilliams. And David, what I'm going to ask you is, I want you to set the context of this event in terms of looking at the global macro economy. Where are your concerns? Where are your hopes that when the dust settles, what will the state of play be? And maybe you'd like to pick up on some of those results we've just seen in the polls.
Well, James, it's funny, just as the poll was going through, my phone beeped with the New York Times breaking news update. It says Joe Biden is going to propose a $6 trillion US budget deficit next year. Now, to give you a sense of how big that is, the American economy is about a $20 trillion economy. So we are talking about government spending north of 25% of GDP in the United States. Now, the reason I start there is we are in an amazingly new era. I believe this era is going to be one of the most exciting for global macroeconomics that we've ever experienced, certainly in our lifetime. And the reason is the following, is that people react to pandemics in an extraordinarily effusive way. And I'm looking at, let's talk about the 1920s. What happened in the 1920s? The economies roared ahead. But not only the economies, ideas roared ahead. It was James Joyce, Picasso, Freud, Einstein, all these people came up with their great works in the 1920s. The economy was called the Roaring Twenties. Why? Because people spent like hell. Also, you see this huge increase in electricity. Imagine in the 1920s in the United States, you have the first time ever, you have electricity in people's homes. You have radios in people's homes. You have the Model T Ford. You have a complete change in the way in which people behave. So what was happening, even if you forget economics, just take ideas, right? There is a pent up demand for new ideas, for new innovation, for new creativity that has been suppressed by the pandemic. And what you will find, I believe, is that internationally, we are going to go into an era which is going to be really, really innovative, incredibly creative. And the reason is the following. Societies change not when technology changes, but when technology changes and social attitudes change. So for example, you think about this Zoom carry-on, right? This technology has been around for years, but nobody used it because it wasn't socially acceptable to be used. So it was a minority sport. Now we're all using it. What has happened, the technology has changed, but the real key is our social attitudes have changed. So if you go back to the 20s, because the 20s is the best period because we have what they called the Spanish flu, which actually wasn't Spanish at all. It came from Kansas. It was an American flu that went to Europe. And the only reason it was called a Spanish flu is the Spaniards were actually neutral in the First World War. And when soldiers started to be killed by the flu, only the Spaniards reported on it. So they got stuck with the moniker, the Spanish flu, right? So that's a sort of what I would call psychological, what I term the mood, right? The mood in economics, which is so important. It's, economics isn't about pulling levers and hoping for the best. It's about tapping into something and then facilitating that change. So if we take the 20s as a model of a decade after a trauma of a massive global pandemic, we have a template. And if we take all the various areas, and again, I always think economics is only up there with literature and science and psychology, it's part of the national discussion. So then you say, well, how has the economic part of the national discussion changed? And that's why I picked up my phone there, right? The great economist, John Maynard Keynes, said, the difficulty is not embracing a new idea, but escaping an old idea, right? And I think now Joe Biden has embraced the new idea and has actually escaped the old idea. And the new idea is something very interesting for us. And, you know, Mary's been through governments that have had problems with financing, etc. In actual fact, that was one of our overriding concerns in Ireland for many years. That's the old world. The new world is the world in which the central banks all around the world, I'm talking the ECB, the Bank of England, the Bank of Japan, and of course the Fed in the United States, have effectively said to governments, go out and spend. Go out and do what it takes to fix your economies. So if you have a big infrastructural problem that's been a hassle for years, just go and spend it. You give us the little pieces of paper called the IOUs, which is the bond market, and we'll give you real cash. So the central banks are actually acting as this, almost the tabernacle of this new religion, which is there will not be a financing constraint on large public projects as long as the central banks continue to backstop them. Now, this is a huge change. So you take those two big changes, and then you have the cyclical change that's happened in Ireland, which is the following. That for the last 18 months, we've been inside, we haven't spent. There's a lot of what they call pent-up savings. Those savings will cascade into the economy as the economy opens. And so what I think we'll see is an extraordinary injection to demand, the likes of which we haven't seen. So take those three things together, a booming United States, and also, as you know, down in Limerick, you know, when America booms, Ireland booms too, because of our close linkages with multinationals and all that sort of stuff. Booming United States, a resplendent, I think, creative sector all across many, many sectors because technology and society have changed. And this cyclical kick, which is the pent-up demand, which is going to cascade down into the economy. So my sense is we're in for something really exciting. Now, things will go wrong, no doubt. Mistakes will be made, no doubt. But the background noise, I really believe, James, is as positive as any background noise that I've seen, certainly in my career as an economist in this country.
That's really good to hear. I suppose the one thing that we do worry about, David, I suppose, because you're talking about, I suppose, modern monetary theory, is that we are relying on the European Central Bank, not the Irish Central Bank, to help us in this. And that brings me nicely onto Mary, because Mary, I want to look at this from a political perspective. Now, obviously, you were in government the last time there was a major crisis in this country. So what I suppose I want to look at it under two lenses, Mary. Firstly, what goes through the heads of the cabinet table and the politicians when crisis mode happens? Because to be fair to politicians, they get an awful hammering in the press, but not many of them are pure financial experts. So they are relying on other people to give them their opinions and whatnot. That's the first side of it. But I also want you to pick up on David's point there of what's happening in the US, where Biden is stimulating the economy by pumping in cash into it, keep it moving. Ireland, as we know in the past, has employed austerity type policies. Looks like the world is changing and there's a new way of doing things. What do you think the Irish government will do? Will they go down the same road? Will they default back into the austerity? In particular, Mary, in light of the Irish Fiscal Advisory Council's comments yesterday, which was kind of stating that, you know, we might not be prepared for the debt that we're building up at the moment.
Well, James, that's what's happening at the moment. And if there's ever a time for what you call MMT, it is when interest rates are low. They're currently at half of 1%. Sorry, minus half of 1%. But it's very different if interest rates are 5 or 10%. The American economy has its own central bank. It has its own currency, I suppose, a reserve currency. And the scale of the American economy is very different to what could happen in Ireland. We never really had autonomy over our own affairs, even before we joined the monetary union. As they used to say when I was younger, if they sneezed in London, we got a flu. But the Irish government and Europe generally are involved in spending. It's a good time to do it. It's the right time to do it, in my opinion. But it'll be very different if the economy were to be strong. And I was in government when the economy was strong. And believe it or not, it's even more difficult when the economy is strong, because what the economists will say is you increase taxes and you cut spending. And I can tell you that's never very easy to do. I think what the government will be thinking of now, they'll be worried. The virus hasn't gone away. Look at what's happened overnight in Melbourne, where they're back in lockdown. So they'll be extremely cautious. Housing and health certainly will be priorities, and getting people back to work. We still have about 333,000 people on the pandemic unemployment payment. And obviously how you pare down that, I see the Taoiseach overnight spoke about next November, they'd pare it back. They have to be careful that people are back in work and getting paid. Some people get paid weekly, others don't get paid until monthly, and they've budgets to meet. But hopefully we can do that in a way that's respectful of the needs of individuals. But I think the government will be extremely cautious in how they approach the opening up of the economy. And in particular, I think the increased spending that we've seen in health will continue. I don't believe that will be pared back after we move from COVID, whenever that happens. I also believe, though, that we're moving in Ireland very much into a social model. Many of you may be familiar with what's called the Citizens' Assembly. This is where a group of 100 people are taken, 99 people plus the chair are randomly selected in Ireland, and they look at issues and they report. They reported on the need for abortion by a huge majority, and many of us felt they couldn't possibly be right. They're out of sync with the population, and they were right. The same with marriage equality. And now they're coming up with recommendations around childcare and more government intervention and care of the elderly, etc. So I think we are moving into that space in Ireland, which is a very different space than where we've been, more into the Nordic European kind of space. All political parties seem to be up for that. The difference may be on how we can make it happen. Yeah. But to sum up, I think the government will be worried, they'll be afraid, they'll be extremely cautious, and they'll be worried about when interest rates change and the implications of that. But for now, I think the European Central Bank have been supportive of adopting what I call the spending approach rather than the austerity approach.
Yeah, absolutely. I fully agree. Thanks, Mary. So Hugh, I'm going to bring you in here because, of course, you're an investor. What I'd like you to comment on is, where do you see the potential growth areas? So when the dust settles and the clouds part, to use our title, where do you think the potential growth areas are going to be around the world?
Well, James, I think the term that we've probably heard a lot of over the last 12 to 15 months is never let a good crisis go to waste. And I think that term couldn't be more appropriate now as we embrace and come out of the pandemic. I'm akin to being in crisis situations over my career. We'd listed our company in the stock exchange in London in 2009 in the middle of the global financial crisis, when everybody was saying not to do it. But when everything else, when the numbers and the opportunities are telling you to do it, then you got to go for it. So I think that's very important. And I think for me, two themes emerge. One is opportunity, and in terms of growth sectors, in terms of where capital is going to be spent, where demand is going to appear as we emerge from this pandemic. And also the regulatory environment in which we operate in, and which regulatory areas are more friendly towards business and pro-business, to be able to spot those. And the second theme is sustainability. And that includes culture. It includes the culture of the organizations that we represent and have grown up with and developed, and how they've changed over the last 18 months. And I think we've humanized the way we engage with people a lot, and I think we've got to sustain that. Also, the diversity and inclusion is a big feature in having different thoughts at leadership tables and throughout organizations, and bringing those voices to action and decision making. We've got to continue to grow and sustain that. In terms of digital adoption and digital transformation, and being ready to embrace the advent of new data streams and data security, data privacy, and how it can transform our business in terms of how we engage with our customers, our consumers, and makes us more efficient, is also key to sustainability. And most importantly now is this whole carbon neutral objective and the energy transition that will evolve from that. And with those themes in mind, sort of 5 key areas stand out for me as areas to focus on. And the first is, and of course these would be applicable to all businesses, and probably find that a lot of the companies that have, and individuals and leaders that have put themselves in the very confident boxes are probably doing these already and doing them very well, and we can learn from them and continue to do these things. But also those companies or individuals that may feel lacking in confidence might think about how they might embrace and adopt these areas that I want to chat about. One is, the first one is about understanding supply chain visibility. I think the pandemic has accelerated a lot of change, but prior to the pandemic, there was a lot of emerging disruptive technologies taking place in lots of business that we conduct in lots of different organizations and in lots of different sectors. And we have to think about moving to where the ball is going to be. You know, if you think about entrepreneurs, and we always hear about the ones that were very successful as opposed to the ones that failed. And there's a lot more that have failed than have been successful. But the ones that have been successful have been able to anticipate where the ball is going to bounce and sort of get there before it does. And whilst disruption has been driven by technology and accelerated by the pandemic, it's about really getting beneath that into the supply chain and to figure out what's actually going on. And when I talk about supply chain, I don't mean the procurement pipeline that people often think what supply chain is, but more about how things, the mechanics of how things actually operate or are going to operate in the future. And the backdrop of we're living in a globalized economy, so all of these factors are of the global nature. If I just give a few examples of themes that I've seen emerge and had to grapple with in terms of working with different boards and different investment institutions, is the emergence in the automobile sector of the transition from the current petrol, diesel to electric vehicles. And while it's clear that the supply chain completely changes for those involved in that, what's even more interesting is when you overlay semi-autonomous and autonomous vehicles with that. And what does that do for other aspects of the supply chain, such as insurance? And we're no longer insuring an individual or a driver, we're insuring a technology, we're insuring components working together. And who better to assess that risk than the designers and developers of those components, or more specifically those that integrate it, which is the car manufacturer. So it's not surprising that all the major insurance companies are figuring out in their horizon scanning techniques how to gain better market knowledge about this. And at the same time, they're seeing companies like Tesla as one of their prime competitors now in the insurance space. Another area is in renewable energy. We've been very successful at implementing projects to get ourselves on the map in developing renewable energy. And we have a long way to go, but we would have seen major investment awards last year in a whole series of onshore wind and solar. But next year, we're going to see an even more significant development and award of offshore wind. And whilst on the face value, it might look the same, but you know, beneath the operating infrastructure of that, it's going to completely change to subsea technology and marine technology. So if you're in that supply chain, you've got to figure out, well, how do you transition and pivot your skills and knowledge into an area that operates subsea? And maybe we need to partner with others that have subsea experience and marine experience to sustain a share of that market as it grows. And also other aspects of that in terms of gas turbines and hydrogen. And we'll talk a bit about hydrogen later as we get into the energy transition.
Yeah.
Also in Ireland, we've been very successful. And if you look at the top 5 project management developers and main contractors resident in Ireland that are carrying out global projects in data center markets. And from a data center development, which is one of the fastest growing market sectors, you know, developing data capacity, because data is this commodity that we all consume. And those developers in hyperscale size and in co-location size, these are the sort of diversity of propositions being developed. They've obviously gone for areas that are high sovereign security in economies like Ireland and Europe and obviously in the US, but and also low energy environment centers where the weather is cold. But as those new markets transition to spaces in more remote and challenging areas, because if Google, Amazon, Facebook, and Apple want to develop and sell their products in all these emerging markets, and outlying locations in Africa and Asia, they're going to have to develop data capacity in those areas as well. And we're starting to see an emergence of opportunities in these areas. And how do organizations who've been very successful in traditional markets pivot into completely different markets where the capacity to deliver is very different? So that supply chain ball moving is very significant. So that's looking at just at that particular aspect of supply chain.
Yeah.
And essentially, as one door opens, another door shuts. So it's really looking for the doors. The second is just sector focus. And the top three sectors for me that are double digits and very clear is data, capacity, and digital security. Renewable energy, obviously in the energy transition, there's significant funding being spent. The numbers that David spoke about in the investment from Biden, a significant part of that will be in renewable energy infrastructure. And our own government infrastructure spend, as we move from a sort of an OPEX Band-Aid strategy to a CAPEX infrastructure spend strategy. So those three areas for me. Yes, other sectors will grow as well, but those three stand out for me as the most. Also looking inwardly at the differentiation factors. Organizations now more than ever need to look at themselves and decide, this is our key USP, this is our differentiator, and we should be anchoring and messaging these USPs in every engagement at boards, at management teams, with staff, in the whole process of the generation of new business. Because that will generate longer term sort of, I call it the stickiness of sales. And we could learn a lot from, in the service industry, from the B2C market in sort of software as service, SAS products, where they look at annual recurring revenue streams. You know, service organizations should also be looking at the strategic value of sales in terms of the longevity of a sale. And yes, we've probably had to do a lot of transactional sales to survive, but now it's going to be looking at the long-term value of those sales. And the fifth area is scalability, and understanding and having access to that scalability in terms of the sectors you operate and the services you provide, but also the capacity to scale in being able to understand your own capacity model and how to generate initiatives and innovation to partner, merge, acquire other services to be ready to jump into that space. So for me, I call it like the 5 S's: the supply chain visibility, the sector focus, the USP. You know, that I'm a bit creative on the S on that one, the stickiness of sales, and the sustainability outlook.
Great, that's really good. Thanks, Hugh. David, I'm going to bring you back in to pick up on this point, or those points that Hugh was making. In terms of yourself, where do you think the investment is? And also what I'd like you to start moving towards, David, is the skills, the future skills that we're going to need.
Okay.
In the world. Where's your head at with this?
Right, where my head is at, Jesus, you wouldn't really want to know. It's a very bizarre place in here. But I'll tell you, I'm an odd sort of creature because I'm an odd economist. I've been working for myself for 20 years. So I haven't had a job since the last millennium. Right? Not in the last century, the last millennium, when I was working in investment banking and all that sort of stuff, all that good stuff. So I always think, and it sounds very trite, but the most important investment you can ever make is in yourself, right? Because at the end of the day, it's yourself that generates the income. Now, you might get lucky and you might back a horse and that horse comes in, and it could be a company, it could be a bond, it could be an equity, it could be anything. But ultimately, the creature who actually makes you happy is this person inside here, okay? And as we move into a different world, I think it's going to be a more disruptive world. Then we've got to say, well, how do I as an individual remain resilient, remain creative, remain innovative, have that certain sort of chutzpah to take those risks, but also, much more importantly, to know which risks not to take, because that's where you actually end up blowing all your cash on chasing the dream that somebody said to somebody said to somebody said, and you think this is all very easy, and suddenly you realize you've bought a pig in a poke. So these are dangers. What I'm talking about is the self-employed hustler, which is effectively what I am, right? And what intrigues me recently is that, yes, we're in a really disruptive world, no doubt of that, but the opportunities are amazing. Like, I'll give you this small example, James. You mentioned that podcast I do, right? I had no rashes what a podcast was about 2 years ago. I really didn't. I didn't listen to them. But somebody said, look, this is the way forward. And it wasn't just a pub conversation. I thought about it and I said, okay, maybe this is right. And so we went ahead and did it. And it's now, I think we'll have 10 million downloads by next month. It's doing 180,000 downloads a week. So it's bigger than any radio program, any individual radio program. And the people are, to use Hugh's idea, they're sticky. They're people who come to you because they want to hear you. They're not stuck there listening to RT because it's just on in the background because their ma's listening to it. So the disruption, what I'm going to say is the disruption that's going on. I mean, I was in Centra in Dunleary last Saturday morning, and two big guys, two firemen came in, big lads. And they were chatting to each other about the magic of Revolut, okay? And I thought to myself, if firemen in their 40s, they weren't young fellas, right? 40s or maybe 50s even, are doing their banking on Revolut, Bank of Ireland and AIB are over. And then I look at my kids and I say, my kids don't know what a bank is. They also do Revolut. They also don't even know what RTE is. They've never watched television, right? So it's very clear disruption that has happened in many industries will happen in all industries. And the question then is, not do you get lucky because of your analytical ability, but are you a resilient enough person to roll with the punches, to dust yourself down, and you take a hiding and you get back up and you say, it's not a big deal, and you move on. And they're the sort of, because I do think what's happening in our Western world is we know the era of the job for life is over. We know the era of the fixed guaranteed pension is probably over. A lot of the safety nets associated with the building of the welfare state from, let's say, 1950 to 2000, those rights that were enshrined as we built the welfare state are going to be less, I think, dependable. So therefore, the question is, and this is probably up to Mary, she knows much more about this than I do, but I've also always thought that politicians and TV presenters, of which are one of a kind. You're either up or you're down, which is why there should be a political podcast, Mary, so you can get into your own groove, and you don't have to respond to people all the time. But my sense is that, because Mary's much more au fait with the skills, is that in terms of investment, invest in yourself. Try to figure things out, try to read, try to see these trends that are going and see, well, will I be affected? Is there a gig I can do that maybe I can actually do well out of this disruption? And always have that confidence to back yourself. And that, I think, is, I could sit here, I'll talk to you about crypto later on, or I'll talk to you about, there will be a bear market in bonds. I know that because we're looking at an inflationary world. I can talk about all that sort of stuff, but I don't think that's actually that interesting in terms of where people are at in their heads. I think the most important thing is, that idea of character versus skills, right? That you've got, I'm always intrigued at funerals, the difference between the skills that people eulogize at eulogies when you die and the skills you put on LinkedIn when you're alive, right? On LinkedIn, you're competitive and you're a go-getter and you're ambitious and you're analytical and you're yada, 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 right? And then when you die, are you kind? Were you generous? Were you decent? Were you a nice person, right? And I think the question for all humans is to try and blend those two together. So have the bit of LinkedIn, but also have the bit of the eulogy characteristics that we actually all really identify with. So invest in yourself, is what I'm saying.
Oh, really good. And I just say, David, there's only 2 podcasts I listen to, yourself and Eamon Dunphy. So I'll try to get Eamon on the next time as well, to maybe have a chat with you.
Well, I think that would be dynamite. Put me and Eamon in the same room, God knows what would happen.
God knows. Mary, I'm going to come to this point with you because, of course, you're the Chancellor of a university. And I have to say, UL, since its inception, was always a very progressive, industry-focused university versus some of the traditional ones. Now, pick up on David's point there. We are getting graduates ready for the world, but are we getting them ready for the real world? Are universities maybe doing enough to help build the emotional intelligence, the resilience, that toughness and readiness for the workplace? And if you think they are, what else could they be doing?
Well, I hope so, but I think much of that has to start even earlier than university. Many years ago, I watched a futurist in the UK talk to to the principals of some of these second level schools, and he said anybody under 10 will on average work at 40 different jobs during their working life. Very scary. So I think I would agree with David, people have to invest in their own brand. So among the skills we have to impart in our young people are skills of confidence. Believe it or not, I meet a lot of smart young people who've no confidence, who can't communicate. And things like how you socialize, how you empathize, emotional skills, not just cognitive skills. I think these are very important. And if there's anything we need to do at university level, and as you said, UL has been quite unique. We've had the co-op program where from a very early age, you go out and you work in industry. We are the highest participants in Erasmus in the country. A third of our students go abroad. These are wonderful experiences, part of character building, part of shaping who we are. But I think we need to have better cross-cutting kind of programs. You don't just produce an economist or a person with a business degree or even a person with a medical degree. I think we have to marry different disciplines into some of those degrees. And I'd love to see that happen. And certainly for the world of education, and I think for all of us generally, COVID has been a wake-up call. It should be and hopefully will be a catalyst for great change. If you take the two vaccines produced by Pfizer and Moderna, they're called the NRMA vaccines. They're a new technology. They were being researched since the 1990s, and they're being researched for cancer. And suddenly, a couple are sitting in their home in Germany, and they're immigrants there, or one of them was an immigrant, and they watch a program from China, and they suddenly say, "Oh my God, maybe our technology could work here," and so it did. And what do we learn from that? We learn don't give up, but we also learned a lot that regulation can be expedited when it's necessary. Normally that vaccine would have taken years to get through the approval process. I mention that because I think regulatory bodies, governments, officialdom has to act much more speedily than has been the case in the past when it comes to recognizing innovation. And very often people get frustrated before their innovation can be recognized. But universities are great places. We've been doing online learning now. It's proved certainly there's a big digital divide. We've had to provide laptops, etc., for students who didn't have them. And in many parts of the country, there isn't good broadband access. I know the government are on an aggressive program to make that a reality. And that's so important because it does impair learning. But we also need to get students back on campus because part of growing up, part of university is about interacting with others. It's not simply about what you learn from a screen or what you learn from the classroom. And I'm a big fan of making sure we can get as many people back as possible this autumn, because I think young people are really suffering by being isolated and remote in their learning.
Yeah, absolutely. I couldn't agree more. I think you feel sorry for college students. They're missing out on a huge part of the experience of college at the moment. Hugh, I want to bring you back in because I want to talk about two quick points before we go to the audience questions. Now, one part of this question is coming in quite a lot from the audience and from the LinkedIn group that we have for this. First thing, Hugh, I just want you to quickly think about the green agenda. I'm asking you specifically because, of course, you grew up, if you like, in the oil and gas world, in the energy world, and that's obviously changing dramatically. And I think we'd all agree it's crucial it does change because the green agenda is becoming very, very strong and relevant. But also I want you to pick up on the future of the office. Now, this is coming in quite a lot from people. I know I'm asking you this, Hugh, because you've invested in office property. You're sitting in one there at the moment. Are we going back to the office when this is all over? Or are we seeing a very different world?
Okay, so let's go to the future of energy first. I think it was, like David picked up his phone there before the meeting, I picked up my phone and I saw the headlines which said that the Dutch courts have this morning instructed Royal Dutch Shell to reduce their emissions by 45% by the year 2030. No longer is it an aspiration, it's now being mandated. And I think the theme of the drive for 2050 decarbonization, zero carbon, is all of a sudden being embraced in a completely different way from like an aspirational to a mandate. And that happens across nations, it's happening across organizations, it's happening across leadership teams, and it's happening across individuals. And it has to work throughout all of that. But my own background, as you said, is oil and gas. And I think, when you look at the future of oil and gas, it still has a role to play, primarily because the first thing we have to imagine before we transition, or as we transition, we have to recognize that we still are heavily dependent on hydrocarbon resources. If you think about Ireland for a minute, we have, of our total generating capacity, 60% of it is still driven by fossil fuels, by coal, by oil, by gas. So when you plug in your electric car at night and you think it's a fully green agenda, you're still, the energy that provides into that is still 60% driven by fossil fuels. And we're on a massive journey to transition and change that. But in the hydrocarbons world, there is a lot of initiatives in place to implement and develop low carbon initiatives, which is carbon capture. And in the next 10 years, hundreds of billions of dollars will be spent in capturing carbon, which has to be part of the agenda. Because if they don't capture that carbon, they can't sustain those facilities that generate excessive carbon dioxide. But in doing so, otherwise, if they just shut them down, we'll end up with all these stranded assets that won't be commercially viable, which will increase the sort of tax burden or reduce the tax income. So it has to be done in balance. So I think there's a role for a low carbon strategy in tandem with the green strategy in renewable energy, and I think that comes with a price tag. And it has to be subsidized. And when renewable energy kicked off, there was massive subsidies being driven by governments to change it. The commercial viability of those technologies has advanced so much that it's no longer subject to subsidy. But carbon capture will probably have some kickstart on subsidy-driven initiatives. But transitioning then to the green agenda, and what we've seen a lot is there's a lot of consolidation in the marketplace of traditional oil and gas majors acquiring renewable energy developing institutions. We're seeing in the supply chain oil and gas engineering organizations being acquired or acquiring renewable developers as well. For example, 2 weeks ago, we saw our own mainstream Irish energy developer being acquired by Aker, who are the largest offshore engineering company, in a $1 billion transaction. So they could enhance their value in that market. So there's a lot of other deals in the pipeline where the two are starting to merge. But if you think about Ireland again, and I mentioned the word, 40% renewable generation currently, and it'll be probably 15 years before we have 100% renewable energy in Ireland. We currently have we have a total installed capacity of about 13 gigawatts. Last year, we saw awards of about 1.8 gigawatts of wind and solar, which was in a developmental auction. Later this year, there'll be another 3 gigawatts of wind and solar go to the market. And next year, there's a 4 to 5 gigawatt initiative for offshore wind. The sum total of that is the pipeline of what's going to get us to 100% renewable energy and electrification. And if you take that in the backdrop of what Biden is doing in the US, I mean, his ambitions, his targets are greater than anybody else in Europe, in China, anywhere else. And his US infrastructure bill is going to explode the market with capital to develop these on an accelerated basis. How he considers carbon capture is still unclear, but he's certainly got a significant green agenda in the spend plans. And I think EU politicians will follow suit. They will throw capital at the renewable energy transition because the FOMO factor will kick in, the fear of missing out. And at the back of that, then there's this hydrogen development where the application of hydrogen, which is a byproduct of sort of waste or excess wind energy, can be captured. Now, that is not yet commercially viable and is still in developmental phase, but it's in that whole transition of the energy transition from current to 2050. Interestingly, in a recent IEA report, they calculated and assessed that 50% of the technologies needed to get us to 2050 to zero carbon are still in development. And so only half of the technologies are actually in play that will actually generate that transition. So,
and can I ask you, yeah, and can you move the office itself, Hugh?
yeah,
Back to the office.
I think the office then, it's an interesting proposition. I think I noticed there at Ingenium, you published a poll recently, which was very interesting, that gave an employee perspective of where people thought they would be, post-pandemic. And 30% of those surveyed said they see themselves coming back into the 5-day-a-week office. And that 50% saw this continuing semi-remote, semi in the office, and 20% saw continuing completely remote. And if we think about the current situation of the flexibility of work, and we think pre-pandemic, and if we look at the millennial motivators that were in place and visible and researched, that when millennials look for employment pre-COVID, they looked for organizations that supported that kind of working environment. So the pandemic has only accelerated that desire. So we're going to be in this hybrid model for the future. And that's the way I see it from an employee perspective. From an employer perspective, of course, you have to look at their investment, their costs, and the return of those. And so far, when we look at the Irish property market from a commercial perspective, they've held up very well in terms of the rent payment. There's been very little default. I think 95% collection rates in the commercial space. Obviously, in retail, it's very different. But there's other considerations from an employer perspective, and that's thinking about data security, data privacy, the cost of internet, as well as insurance. Does the place of work now if it's at home, does public and employer's liability insurance need to be extended to cover that? And what is the cost of that? So there's some considerations to consider, but we'll end up in a hybrid model, and employers and developers will have to embrace that as how things are going to work in the future.
I fully agree, yeah.
And one other thing, though, that will affect and impact this, of course, is managing inflation. We have, in property development, we're anticipating construction inflationary costs of around 15% over the next 18 months, based on the whole supply chain of everything that's been cascading so far. And that's going to drive prices up, going to drive rents up. So there are further burdens for developers and employers to think about on top of that.
Yeah, thanks. And I'm going to actually, David, I'm going to come to you on this one next, because now we're moving into, I suppose, the general questions that are coming in from the audience and whatnot. David, in your podcast a while back, you made the comment about you would advise the 30-year-old generation not to buy property at the moment.
Yeah, it's a scam.
Yeah, words that effect. Yeah, and I would know a few people who literally pulled out of the market based on what you just told them. Now,
let's stop.
Actually, there's one or two of them on this call. Now, David, my only concern is going back to what you said there. Inflation is going to the housing price inflation is going to keep rising for a while. So if they pause for the next 2-3 years, is the price just going to go up? So when is the right time to buy?
Okay, James, well, here's the thing. You probably won't be surprised. I think the single most delinquent part of the Irish economy is the commercial property and housing market, and the extraordinary supernormal profits that are being yanked out of normal people. I mean, the thing about economics is property generates nothing. Let's understand that. Where all great innovation comes is in productivity gains coming from innovation, right? And the most spectacular economic machine we have is this thing between our ears, the human mind. That's where it all happens. Okay, that's the source, it's the font, and it's the elixir of wealth. And from that, then you get trial and error, you get tinkering around, you get people having a go, you get collaboration, and you get old models being disrupted, as Hugh talked, by new models, and as Mary talked as well. Okay, and that's what Schumpeter said, the relentless gale of creative destruction. That is the fact of the modern capitalist economy, which we are and will remain very much part of that. And when I say capitalist, I don't mean it's kind of it's a weirdness moment. I mean an economy that is governed by and driven by products that are validated in the market, okay, that live and die by their marketability, right? So I actually look at economics, as you probably know, James, more like a process of evolution than some sort of physics-based hard science. That's
Absolutely.
the way I think of it. Okay. And in that evolutionary process are all these various iterations, right? That, you know, we evolved not because of anything other than that characteristic we had, that trait we had, allowed us to survive, and that's passed down and reproduced, and away you go. So the single most delinquent part of the Irish economy is the land lobby. Okay, it is inconceivable to me as an economist that the country that, after Norway, is the least densely populated country in Western Europe has the highest property prices. That means we're dealing with a scam. We're dealing with something that is not only inefficient, but is orchestratedly more expensive than it has to be.
Yeah.
So why do you think Sinn Féin are going up in the polls? Because we think it's acceptable to say that, you know what, I think prices and rents will go up. They've said to the young people, do you know what? It's not acceptable. Now, whether they have all the solutions doesn't matter. They're on the right message, which is that somebody said that the role of, I think it was political leadership or maybe other leadership, was to understand the anxieties of the people and do something about it. That was, you know, the political leader needs to understand what the people are worried about and do something about it. The people are worried about housing. The people are worried about rents. The people cannot afford. I mean, and again, for an economy whose business model is based on attracting in capital and talent, fusing it with our own and re-exporting it out in high value added products, that's our model. Having our fixed costs blighted by something as ludicrous as land, creating a drone class of people who live off rents, okay, rather than who live off any sort of innovation. I think if you ask me what the biggest threat to the Irish economy's prosperity in the next 40 years, not 10, not 15, but it's a long time, it is the disproportionate amount of our income, our effort, and our genius, which is sucked in by a resource, land, which is ultimately an inefficient resource. And you can only do two things with land. You can either use it or hoard it. And if we create an environment where hoarding land is not only acceptable, but is economically and financially incentivized, then we've got to revert that, reverse it, change it. We can do it gently, we can do it democratically, we can do it collectively, we can have a bloody National Assembly on it if we want, I don't care. But we've got to fix it, because it is a huge problem.
Yeah, and I wouldn't disagree with anything you said there. Absolutely right. Mary, I'm going to come to you here, but I want to, because a lot of comments coming in on Brexit, Mary. Now, I'd like to know your opinion on Brexit, because a friend of mine, we have this idea that, you know, certain people voted for Brexit and, you know, London didn't. There's a very close friend of mine, Eric, who very highly educated person. I have all the time in the world for him. And when we spoke about Brexit, he was adamant Brexit was the right thing for England and the right thing for the UK, which I couldn't believe that was the view, but he was right. That was his view, and you respect that. Now, since Brexit's happened, COVID's happened, so the impact of Brexit has kind of been, I suppose, muddled with the COVID impact. What do you think is the fallout from Brexit, though, when it does settle a bit? What is the fallout for Brexit? And Mary, we did think that one of the silver linings would be that the financial services might spill out of or leave England and maybe a bit of it would fall into Dublin in particular. But with the virtual world that we're in, will the financial services not have to come to Dublin now? Could it leave us without that potential benefit of Brexit?
Well, if I could just refer back briefly to what David said about housing, and I agree with him. I think part of the problem here is the overconcentration in the Dublin area. It's remarkable, friends of mine that live in the environs of Limerick or Cork, the kind of house that you would pay $1 million, $2 million for in Dublin for a fraction of the cost. And I think we need to make more things happen. The Dublin population is anticipated to grow by about 25% under the government's own plan between now and 2040. I'd love to see that constrained. And I think with new ways of working and new opportunities, that may be more possible than we thought. Brexit, I'm a European. I was very sorry to see Brexit. However, I visited a town in a city actually in the northern part of the UK 18 or 20 months ago, and I went in and I saw shop after shop closed, very little in the area, and I said to myself, the industries had closed, and no jobs for those that were left behind, no replacement. And I said to myself, am I surprised about Brexit? But I think it's too early to say what the impact will be in the UK. If you watched Mr. Cummings yesterday, and he had a large part to play in Brexit, I think there'll be faster implications than Brexit to be worried for the British government to worry about. But I think from an Irish point of view, it's early days. It's going to be, besides the Northern Ireland dimension, which is very problematic. I think from a financial point of view, it will be more of a cost to us than it will a benefit. A lot of Irish companies only experience of tradings with the UK. They're finding it hard to diversify into other markets. Some have. The bigger companies, yes. Smaller companies are really struggling. The advantages for Ireland, we're the only English-speaking country left in the EU. That is a bonus. You know, to refer back to what Hugh said, I think some people will work from home part of the time, but I think the majority of people will be back to an office environment. And certainly if you're a young person and you're focused on your career in an organization, you need to be in sight, in my opinion, and you need to be learning from those that have more experience than you. And I think over time, whilst it's very fashionable now to say many of us will work from home, I think some will, and some will work from hubs and offices that will be hubs into the main head office. But I think I wouldn't predict the end of the office. Where the office is located may be an issue, and it may not necessarily be in big cities. You know, there'll be there's a lot of challenge coming for big cities, but I think people will still work in an environment where they work in teams with others, and that's much easier face to face. I find the world of Zoom, it's difficult to put energy into even speeches like this. On the other hand, this webinar wouldn't happen if it wasn't for this tool. I accept that. You know, you wouldn't have whatever it is, 300 people or 250 people in a room in Limerick or Dublin right now listening to, certainly not listening to me, whatever about David and Hugh. So I think lots of things are possible, but I genuinely believe that it's early days to predict what the impact in Ireland will be from a financial services point of view. We'll get some, Frankfurt will get, and other big cities will get many of those companies as well, but they won't all exit the UK. And indeed, in the health world, I know well there's great interest in going into the UK. And Hugh mentioned the big interest in sustainability. There's a huge interest at the moment in investing in healthcare. Healthcare companies are commanding a factor of EBITDA that was unheard of 2 years ago. Virtually all kinds of healthcare companies, there's huge investor interest in investing in health because, of course, it's done incredibly well. Healthcare generally has done, whether it's on the supply distribution side or the therapeutic side, has done incredibly well during the pandemic. And there is a big focus at the moment on that sector. And in the context of Irish healthcare companies, there's a lot of focus from outside Ireland investors coming into the market right now and acquiring some of our smaller, very innovative healthcare companies.
Yeah, thanks, Mary. Okay, we're coming towards the very end, so I have one last question. I'm going to throw this at David and Hugh because I think you might have slightly different views. I'm not sure. In 1 minute, David, and then I'll go to you. Cryptocurrency, yes or no?
Crypto is an asset. It's not a money. And once you understand that, particularly Bitcoin, but it is not money. It is something. I'm not too sure what it is yet, actually. But it's not money, and for now, treat it as an asset. And when an asset's price goes up by factors that we've seen over the last while, just be worried that you're not in the greater fool game, that it's not something that looks and feels like a Ponzi scheme. One of the problems, and I'll leave it there, is that crypto is also theology. You're either a believer or you're not. It's not really economics or finance. And the people who believe crypto and are really into it, and they really are into it, right? They see the increase in the price as suggestive that crypto is becoming more like a money, okay? And therefore it validates the philosophical background to it. My problem is I see the increase in crypto's price as being the opposite, because money can never be more expensive than it should be, because what gives money its beauty is actually its social technology, that everybody can have it and everybody can use it. So what I would say to people in crypto is just be careful. I don't actually know what it is yet. I certainly know that it's not money in any economic sense.
Yeah.
It is an asset. And when assets go through the roof like that, there tends to be a precipitous decline, which a lot of people will lose a lot of bread.
Yeah. Hugh?
I see it as a bubble. It's the FOMO factor again. It's the fear of missing out. It's not a sovereign-backed currency like a euro or a dollar or even a Zimbabwe dollar. It doesn't have any earnings. You've got no way to evaluate it. It's sort of created by a social media frenzy of maybe we should be in this because everyone else is making money on it until they're losing money on it. It's too easy to invest in. And anything that's too easy to invest in is probably, and make money quick scheme, there's probably going to be a downside to come crashing down. But my philosophy in investment is if you don't understand it, don't invest in it.
Yeah, I think that's a good point. My brother gives me tips on crypto, and that says it all for me. I wouldn't take Matt's opinion on too much of those things. So look, I'm going to draw us to a conclusion here. Firstly, I want to thank the panelists, David, Mary, and Hugh. Thank you very much. I think there's a lot of questions coming in. We might try and deal with some of them offline after the event. We probably could have talked for another couple of hours on this, but unfortunately we said an hour. So firstly, thank you for all of you for your time. I'd like to thank IMS for their support in helping us manage this event from a technical point of view, and also to Ellie and Lisa on the Ingenium team who've done a super job of bringing you all together and getting everybody from around the world here one time, all at the right time at the right place. So with that, I'm going to say thank you. Thank you for your time, everybody. I hope you enjoyed it. And as I said, please, if you can, have a look at the new Ingenium website and brand, and feel free to give us your feedback. We'd really appreciate it. So until next time, take care, stay safe.
Cheers, guys.
Bye.
Bye.
Bye, everybody.
Bye.
Thank you.
Bye.